IMC and NCDEX, we've been doing it for long years, and this is an absolutely interesting topic: sustainable agriculture, rebuilding the value chain by managing price risk. I have great pleasure in introducing and welcoming IMC President Anand Singhania to deliver his presidential welcome address. Mr. Singhania, over to you.
Thank you, Mr. Chandrasekhar. A very good afternoon, ladies and gentlemen, and heartiest greetings on behalf of the IMC Chamber of Commerce and Industry. It gives me immense pleasure to welcome each one of you for this very interesting event organized by the IMC in association with the NCDEX IPF Trust. We all recognize agriculture as an important sector from both economic and social standpoints, as it contributes around 15% of India's GDP, but provides, very importantly, livelihood to over 50% of the country's workforce. Developments in the farm sector impact many sectors of the economy that have linkages locally, regionally, nationally, and globally. The growing demand for food, increasing wealth, urbanization, changing preferences and diets, along with the competition for land, which is it's a resource which doesn't grow. Water shortage and climate change have increased the focus on developing sustainable agricultural value chains. Therefore, there's an urgent need to streamline supply chains to optimize the food production cycle and cut waste at the retail and consumer level. And at the same time, to develop a win-win model for growers, exporters, importers, consumers, and traders, basically all the stakeholders. Unlocking the true potential of agriculture and allied activities requires continued efforts and strategies, including infusion of technology in production, processing, and supply chain management. Long-term sustainable growth is possible in the farm sector when the sector is made competitive and remunerative for farmers. India is blessed with several natural endowments: good sunshine, rainfall, biodiversity, a very long 7,500 kilometers of coastline, varied agroclimatic zones, land. And we need to leverage all of these various endowments that we've been blessed with. The supply chain efficiency can be boosted with the infusion of appropriate technology. Technology infusion is the key for holistic end-to-end solutions. We need to adopt multiple technologies. The technology may be in the field of infotech, agri-tech, satellite tech, drone technology, nuclear agri-tech, nanotech, etc. They're all required to gallop towards the growth that India is poised to have. We are a $3 trillion economy, expected to get to maybe $30 trillion in the next 25 years. India has just crossed the world has just crossed 8 billion people, and they need food. Food is very essential for everybody. I firmly believe the Indian farm sector deserves support, policy support, investment support, and more importantly, research support. We need to move up the value chain. Eventually, in the years to come, this will lead to our countries becoming dependent on India, Bharat par nirbhar, and not only Atmanirbhar. A very warm welcome and special thanks to our speakers who would bring bigger, better, and deeper insights into this very important subject. I'd like to welcome Mr. Ankit Agarwal, Executive Director of Amar Agarwal Foods Private Limited, Ms. Prerna Sharma Singh, Founder of Indomix Consulting Private Limited, Mr. Arun Jadhav, Senior Vice President of NCDEX, and our own Mr. G. Chandrasekhar, who's the Economic Advisor, IMC, and a Director of the IMC ERTF. Before I conclude, I'd like to say a few words about the IMC. The IMC Chamber of Commerce and Industry is a premier Chamber of Commerce, which has completed 115 years of human service to all its stakeholders. We have about 5,000 members who represent from various areas, from the MSMEs to the corporates to traders to exporters to people from professional background as well. And we have 150 trade associations who are our members. And collectively, we have a reach of about 4 lakh members where we reach out to. Now, what does IMC do? IMC is a voice for us, all our stakeholders. We make white papers, we make representations on all new policies. We give out a vision for India's growth for tomorrow. And topics and discussions like this help us in identifying those areas that need to be brought to the notice of all the decision makers. We are a body which liaisons both at the state and at the center to bring out policy papers, to bring out changes that are there. We are part of the Government of India's initiatives in terms of budget reforms. We have a very important IMC arbitration center where we provide international arbitration and mediation to reduce the backlog and reduce the pressure on the already overburdened judicial system. The chamber has we have about 22 expert committees in various fields. We have one on agriculture, we have one on banking, we have one on international business, and so on and so forth. We also have 2 very important wings. We have the IMC Ladies Wing, which is a body which empowers women. And we have the Young Leaders Forum, which is for the youth for tomorrow. In the world's median age, ladies and gentlemen, can you believe it's 30.1 years? That means 50% of the world's population is below 30.1 and 50 is above 30.1. That's a very interesting statistic. So I have chosen Partnering for Growth as a theme for the year, and I'm very happy to have partnered this program with NCDX. And with this, I welcome you all to this very interesting seminar, and I'm sure there'll be a lot of good takeaways. And I wish all of you a great evening filled with learning and knowledge. Thank you so much. Over to you, Mr. Chandrasekhar.
Thank you very much, Mr. President. I must mention every single sentence. What you spoke is so much loaded with wisdom. You talked about our endowment. You talked about need for multiple technologies in agriculture. Extraordinarily important. All these are. So thank you very much for this very inspiring opening remarks and presidential welcome address. We will now take this forward. I have a presentation to make, but there are some tech glitches which I've started to face in the last 15 minutes. For I'm using somebody else's iPad, and for I'm not showing you my presentation, but I'm going to speak my presentation. Put it that way. Let me start by saying that agriculture. No, even before that, let me mention one more. IMC Chamber of Commerce and Industry is a SEBI accredited training institution for commodity derivatives. Okay, there are about 20 odd institutions the SEBI has recognized for training in commodity derivatives. But IMC Chamber is the only chamber of commerce in this country. There are hundreds of chambers of commerce, but we are the only chamber of commerce in India with the recognition from SEBI to be a training institution. And in that capacity, we work with the commodity ecosystem, various market infrastructure institutions to conduct a series of awareness and training programs. Now, let me come to our subject proper: sustainable agriculture, rebuilding the value chain by managing price risk. All of us know agriculture is a risky business. Okay, and I would think in India, under Indian condition, agriculture is the riskiest of all businesses. Okay, and in my view, Indian farmers are the biggest risk takers. With due respect to all industrialists, not industrialists, but a small Indian farmer is the biggest risk taker in India, primarily because he is subject to so many uncertainties. Then we have, after the farmer who's a primary producer, we have the agriculture value chain participants, whether he's a processor, he's a distributor, a packer, an industrial consumer, an importer, exporter, service provider like warehouses, finance, etc. All these market participants are value chain participants. They face volatile market conditions. Okay, and therefore they also face a huge amount of risk. There are multiple factors that drive agriculture. Of course, all of us know very importantly, you have weather conditions determine the fate of agriculture, quantum of output, quality of output, demand conditions, finance, support services like warehousing, assaying, shipping, etc. All these factors actually impact the agriculture commodity markets anywhere in the world, and certainly in our country. And more importantly, our economy is integrating with the global economy. Our markets are integrating with the global markets. And therefore, this integration of the domestic market with the global market is throwing up newer challenges over the last 15, 20 years because of liberalization and globalization. Through the trade route and through the investment route, our markets are facing new challenges, which we need to overcome. Now, any business for that matter, and certainly agribusiness, and those in agribusiness need advanced planning, because agriculture production is seasonal and regional in India. How is it seasonal? We have two seasons: the Rabi season, the planting for which is going on, and of course the Kharif season. But while the harvest is only for 2 months, the consumption is throughout the year, is around the year. So somebody must carry the stocks and also carry the associated prices. Similarly, agriculture is also regional. For example, wheat. Wheat is essentially grown in northern India. Rapeseed mustard is essentially grown in northern India. Coffee is essentially grown in South India. Tea in southern and eastern parts of the country. Whereas there are some crops like rice, for example, which is pan-India. Cotton is almost virtually pan-India. Therefore, there are seasonal variations and regional variations, but consumption is throughout the year. And therefore, the value chain participant, whether it's a primary producer or a processor or an industrial consumer, exporter, importer, trader, service provider, you name them, they have to plan their business in advance, because the harvest period is very short, arrival period is very short, but demand will be throughout the year. And also those in agribusiness, post-production business in particular, will have to do their inventory management, raw material inventory and finished product inventory. They need to probably make advance sales even without holding the goods in their hand. They need to make commitment for advance sale. They need to purchase in advance, take delivery of the cargo probably a month or 2 or 3 later. They need to manage their cash flow. For all this needs advanced planning. And this advanced planning, without this advanced planning, businesses run a big risk of losing out. And agribusiness itself, or agriculture itself, faces multiple risks. For example, there is production risk. You have quality risk, you have market risk, you have payment risk, you also have policy risk. What if the government changes the policy? There are several risks which agriculture in general and certainly agribusiness market participants face. And these risks, production risk, quality risk, market risk, etc., converge into one factor. And that one factor is price. Okay? All these factors. Therefore, if you are able to manage the price risk, then you would have indirectly managed all the underlying risks. And then therefore, it is important that we have a mechanism or tools for price risk management. And more important, the farther the trading position, greater is the risk. For example, if I have sold, or if A has sold to B on 1st of January, say 100 tons of sugar to be delivered by 10th of January, the risk is only for a short period of 10 days, during which not much, there may not be much volatility. But if A has sold to B on 1st of January to be delivered on, say, 15th of April, then that window, the trading window, is much longer. Therefore, to that extent, the risk also gets accentuated. And therefore, because agribusiness traders have to make forward purchases and forward sales, they need advanced price signals, and they also need forward guidance so that they are able to take informed decision about their business. And what is that mechanism? What is the tool that allows them this forward guidance or forward price signal? That is what is called hedging. Okay, hedging is a scientific, time-tested method of managing price risk, as the president also pointed out in his welcome remarks. And therefore, price risk management through hedging process actually helps all the value chain participants, and it helps them lock in their existing profit margins that they build in their trading transactions. And for that also, hedging also allows them to take informed trading decision because they get advanced price signals. But let me make it clear, this hedging is not going to provide value chain participant any windfall gains. It's like an insurance. It'll protect your interests. Okay, so that's important. Then let's talk very quickly about sustainable agriculture. No, the word sustainability, and particularly sustainable agriculture, in my view, goes well beyond environmental concerns. People usually think sustainability means conserve water, no emissions, etc., etc. Yes, that's very important, but sustainability is far beyond the environmental concerns. It needs to protect people. Sustainability means protection of people, protection of the planet, and of course, protection of profit for businesses. And in the agriculture ecosystem, that sustainability covers importantly not only the production activity, but also post-production activity like processing, distribution, consumption, trade, etc., etc. Then we are talking in the theme is rebuilding the value chain. So we need, again, as the president pointed out, we need to use technology to infuse our supply chain with greater efficiency, and therefore and technology can help reduce the distribution costs, and which in turn will certainly benefit the economy. And therefore, the value chain participants deserve a robust risk mitigation practice to sustain business growth. And therefore, agri-derivatives are extraordinarily critical for building efficient value chain. Now, when we look at, I'm just towards the end of my presentation, when we look at typical, say, supply chain or value chain for, say, oil seeds complex, okay, you have millions of oil seed growers. Then you have aggregators, okay, they who buy from them. Then that goes to oil millers for crushing, and that then it is separated into oil and cake. Okay, oil goes to refineries, the cake goes for animal feed. So at every level, there is a price risk. Every value chain participant faces a price risk, and therefore they need to manage that price risk. Otherwise, they face a great amount of uncertainty relating to their top line and their bottom line. And therefore, that makes a strong case for a very scientific risk management tool. For in the absence of a risk management tool, all value chain participants are hurt, including in particular growers and the farmer producer companies. And that's an important message for the policymakers. And I also found there's hardly any empirical evidence to prove that derivatives trade actually distort the physical market. There are two markets, the physical market and the derivatives market. And the derivatives market is both are two sides of the same coin. And therefore, the derivatives market is dependent on the physical market. And the physical market is dependent on the derivatives market for price risk management. And therefore, I would strongly argue that India deserves a vibrant, liberal agriculture markets. And I would even say ill-advised suspension of derivatives trade is proving to be counterproductive. And therefore, we need to seriously review this suspension. With this, I will conclude my presentation. Let me now invite Ankit Agarwal to share his thoughts. Ankit, the floor is yours.
Thank you, Chandrasekhar ji, for providing all of us with such wonderful insights about price risk management. I'm Ankit Agarwal, everybody, Director of Amar Agarwal Foods India Private Limited. We are a company based in Erode, and we have been dealing primarily with turmeric and all the other spices also since last 45 years. So,
sorry, where are you based? You said Erode in Tamil Nadu.
Yes, Erode in Tamil Nadu.
Awesome. Thank you very much. Good. I'm delighted. Yeah.
Yes. Erode is one of the.
Of course, I know. I visited
for turmeric.
I visited many times. Okay, all right. Yeah.
So the primary business that my company is involved into, it was started by my granddad. So we have been into this business since last 45 years. What we have been doing is we procure spices from farmers. We bring it to our factories, we have it processed, and then we supply it. But there were a few things that I noted in Chandrasekhar ji's presentation, as well as when Mr. President had, the arrival period of all these crops, the major arrival period, is around 90 to 100 days. It is during these 90 to 100 days that any processor of these spices is supposed to procure it from the farmers, because that is when you get the best prices, you get the best quality, and you will have to store it so that you are able to supply it throughout the year to your clients. The clients are, of course, the masala people, the masala manufacturers, there are exporters, and then there are domestic traders as well. So as a processor of these spices, it becomes important. Our role is basically to make sure that we are able to supply our clients with the consistent quality at a consistent price throughout the year till the next arrival comes. So, of course, this used to be a little easy because the arrival used to be in a staggered manner when the crop size was small. The crop size of turmeric in the year 2005, 2006 used to be just about 30, 35, 40 lakh bags, which used to be staggered throughout the year. But of late, what has happened since since 2 or 3 regions have developed, like Telangana, Tamil Nadu, Maharashtra, Marathwada. So the concentration of the supply of turmeric is during the months of March, April, May, and June. So again, this became a challenge, not only to me, to all the process, because we have to procure it during this time, and we'll have to manage a price risk throughout the 12 months. And this was becoming more and more challenging. And that is when I think NCDX was launched in the year 2005, 2006, during that time. And I believe that NCDX in particular has played a very important role in how business is being conducted. And during these last 2 decades of NCDX being in existence, I think it has changed the way most of us do business. All the processes of turmeric, let it be dhania, jeera, or turmeric. And I believe there are 2 or 3 main advantages which I would like to point out, primarily that NCDX has provided all the stakeholders. Number 1 is price discovery. Earlier, it used to be, the price discovery was a little bit, it was unorganized. And there were people sitting in Sangli who used to tell their price. There were people sitting in Nizamabad who used to tell their price. So it was a little unorganized. But I think one of the primary areas where NCDX has added a lot of value is with price discovery. All the buyers and sellers across the country are able to come on a common platform, and they're able to execute their trades. Let it be buying or selling or hedging. I'll come to hedging in a while, but this common platform has ensured that buyers and sellers from any part of the country can come together, and the process of price discovery can be very smooth. So price discovery is one of the most important aspects. Number two, I think transparency. One of the main stakeholders in the supply chain of any agriculture commodity is the farmer. And because, as you all know, there were Kachiyad people, there were traders, there were exporters, all these people were there. But since the prices were not transparent, there used to be a lot of manipulation that used to happen. I believe still it happens in commodities that are not very active on the exchange. So the second most important value that I believe NCDX or an agri contract adds to the commodity is transparency, wherein the farmers are able to get the fair value. Let it be, I'm not telling they're able to get the most out of the most value for their crop. No, that is not the case, but they're able to get the fair value, which may be say a 40 rupees, 60 rupees or 80 rupees. The price doesn't matter. But this is the price that has been discovered by the buyers and sellers coming on the platform. And so I believe this is the fair value that the farmers are able to get. And because of this transparency, the farmers are also able to make decisions on whether they want to go for the same crop next year. Are they happy with the price? And this whole thing becomes a circle. Whereas if the farmer is not happy, say for example, turmeric was sold for 53 rupees during the lockdown period in March or April 2020. So the farmers were not happy with the price that they were able to get for their crops. But since this whole process was transparent and they were able to see what the future prices would be, and they were able to take calculated decisions, immediately what happened, the crop which came in 2021 was a little less. Because of which the prices again came back to normal, which was 70, 80 rupees. So this whole thing happened in such efficient manner only because there was transparency with the price. Why are the farmers getting this, whatever price they're getting, or the farmers were able to take calculated decisions. So that I believe is the is an area where NCDX has added immense value during the last 2 decades. And of course, now coming to the other part of the supply chain of any agriculture commodity, that is the processors or the traders or the exporters. Now, like I said in the beginning, it became very important for any trader or any processor to manage his risk, because he was going to carry his stock for the whole year. So NCDX gave traders like me, companies like that of ours, a platform wherein we could hedge our stock, and we could ensure that we are able to supply our clients with the consistent quality at a good price throughout the year. Now, there are many factors that determine the price of the agriculture commodity. Supply and demand, as everybody knows, is one of them. But it is not only supply and demand that can determine the prices. There are various other factors that we have come across during our day-to-day experiences that determine the price of the commodity, like weather, pest control, etc. So NCDX, when any agriculture commodity is traded on an exchange with future contracts, it also gives stakeholders like us an opportunity to make calculated estimates of what the prices are going to be 3 years or 6 years down the lane. So that gives us an immense possibility to take calculated risks and take positions on the longer horizon as well. And apart from these advantages that traders like we have had because of the exchange during the last few years, I believe even in the future, there are many opportunities, many areas that are yet to be explored. And with efficient, and if as an exchange, if as all the stakeholders, if we are able to efficiently manage how we are going to take this forward, I believe there are immense opportunities. You can have inclusion of many more corporates once they start believing this entire process. You can have inclusions of FIIs as well. So I believe the opportunities are unbound, and I believe once we are able to efficiently run these, I believe, I'm sure the exchanges and the contracts are run efficiently even now. But if we're able to take them in the right direction in the next 1 or 2 decades, I believe it is not like Mr. President said, it is not going to be Atmanirbhar Bharat, but Bharat Pe Nirbhar. So that would be a dream come true. Thank you, everybody.
Thank you, Ankit, for sharing your thoughts. You emphasized on transparency, which is extremely important, which we call in trade jargon price discovery. Okay, and price discovery in a very transparent way, which is not available in the physical market. It's only the derivative market which gives you that opportunity for price discovery. Okay, now before I invite Prerna, I want to recognize the presence of a very senior person in our country's agri ecosystem, and that is Mr. B.B. Patnaik, my dear friend. Patnaik Sahab has held very senior positions in several of the government organizations for the last 30 to 40 years, and currently is an independent director on the board of a number of companies. And I'm so delighted that he is joined. That shows his abiding interest in the subject. Patnaik Sahab, welcome. I'm now going to invite Prerna to share her thoughts, and after that, of course, Arun will share his thoughts. Yeah.
Thank you so much, sir, and and thank you so much to NCDEX as well as IMC for having me here. Anita, can you please share my presentation? Yeah, maximize it, please. Thank you. Okay, so I would be speaking more about like the effects that the recent bans has created on the whole agriculture ecosystem in relation to the futures market. So you can see a snapshot of suspension of futures by the government that has happened over the years since 2007. Almost every year we can see, I'm saying almost every year, we can see like 1 or 2 commodities getting banned. There are a few of the commodities you can see here in the slide that are still not relisted on the exchange, and we are still waiting for that. The recent one, the setback that we had in December 2021, the top traded commodities of NCDEX, so like chana, mustard seed, refined soy oil, crude palm oil, paddy, wheat, mung, and the other commodities, they were banned. Now the question comes, next slide, please. So the first question comes, why government resorts to banning agri-futures? We have to see from the perspective of government, why government does like that. So that's the first step that government takes whenever there is an inflation which is not under control. So as per government, the futures trading is linked to a speculation, and a speculation aids to food inflation. Now, food inflation, why government is thinking like that? We have seen generally what happens, like whenever there is a panic in the market that there is a shortage coming over. So the herd mentality is like we want to buy more and more. So when we want to buy more and more, shortage is being created, and the government's eyes turn towards the futures market because there the people will be going long. So the easiest scapegoat becomes the futures market. And the first step taken by the government is to ban it. Now, then the question comes, is there any evidence that suggests futures trade leading to food inflation? There have been numerous committees and panels which have been established in the past, and they have come up with the report that says just the opposite. So I will give you a few examples like Abhijit Sen committee in 2008. Then we have RBI report in 2009-10, and then we have Parliamentary Committee on Food, Consumers and Affairs that came with a report in 2011, and that said that there has not been found any linkage, or even if it is found, it was a little in between futures and price rise. Now we will see, like, does future banning really help to tame food inflation? Now this data I have taken from December 2021, when the futures trading for most of the top traded commodities on NCDEX were banned. You can see these are the CPI food inflation in percentage. You can see the graph clearly showing you that the banning of futures is not taming food inflation. Then comes the question. So at present, like in September, it is from December 4.05%, it has come to 8.6%, the latest one we have. So what are the reasons of inflation then? The simple economics says it's a demand supply mismatch. And when demand supply, we have, like Mr. Chandrasekhar told you about the different factors that lead to the demand and supply of the food grains. Then we saw the perspective of Mr. Ankit, like being affected by this futures ban. He has explained it in a very nicely, like how the market is being affected. One of the important factors that I would like to tell you here is the intervention of the government. And when I'm saying that, I would like to give you, take the example of food grain economy as well as the sugar economy, where the control is the most. Food grain economy, what happens is, in the food grain market, we have to understand, like the government sought to achieve the food security by ensuring remunerative prices to producers, and it also aims to safeguard the interest of consumers by making them food available at affordable prices. Now, in doing so, what government does is, government fixes the input prices in terms of water, electricity, fertilizer, and government fixes the output prices that we have seen in case of MSP. And government controls the procurement, storage, distribution. This has resulted into government being one of the largest storer house of food grains. What has this has result? Now we have seen that the dominance of government in the food grain economy, whenever the one party becomes dominant, there is the neglect. We can see the other party gets neglected. So what happened here is the private sector party, they get crowded out. And the excessive intervention of the government is basically disincentivizing the private players to go for long-term investment in infrastructure such as like storage or storage, warehousing, processing units. Then comes like, okay, so I will tell you like why the government has policies. I'm not against the government intervention is needed, but is it needed now at present in this? When FCI was created in 1960s, like 50 years back, that time it was, the objectives were different because India was a food deficit country. We were struggling for survival. We needed more and more food. Now India is a food surplus country and we are net exporter of food grains. So when I say that, so we have seen the paradigm shift. Now in this transformed economy, if we will be continuing with the same policy of like backing up with like a steadily rising supporting prices, then the procurement, the farmers have responded. And now we are producing much, much, much more than what we need. What we need, here comes the consumption pattern. Now to give you some data related to consumption pattern, you must be knowing that there is a demand shifting towards the non-food grain commodities. So non-food grain commodities, when that is said, so it's towards the, like we have oil, we have the protein items like vegetable, like dairy products, vegetables, fruits, oil seeds, pulses, eggs, dairy products. And now the trend of supply, the trend of supply is showing you like record production of rice and wheat. So the trend of decreasing demand of food grains and the increasing supply of food grains is leading to a disconnect between the demand and supply. So we can say that the production pattern is not synchronized with the supply pattern. And the government intervention has led to a disconnect between the demand and supply of the food grains. It was needed when we, during the time of Green Revolution, that was needed. But now at present, it's really, we need to rethink. Now, given fiscal constraints, we all know that the government, because of heavy subsidies and the FCI, like the excess amount of debt burden. So whenever the there is fiscal constraints, there is always a trade-off between the subsidies and the increasing investments. And when you see the data, so the Indian government is more focusing towards subsidies, and that really harms the growth of agriculture in the long run. The imbalance between the subsidies and the investment needs to be urgently corrected for having a sustainable growth in the agriculture sector. So here comes the populist pricing. The populist pricing, the first example, you all know, like the steadily rising, so unthoughtful rise in the MSP prices of rice and wheat, that has, the objective has already been achieved now. The similar thing happens in sugar as well. Sugarcane price is controlled. Sugarcane price is controlled, and it is decided by the government, but is purchased by the sugar mills. But sugar mills have no say. Whatever the government will be fixing, they have to buy it. Whatever the quantity is coming to their factory, they have to purchase it. And what has happened? Rice and grain, rice and wheat, we have discussed. What has happened in sugar? Sugar, we need the consumption or the demand is around 26-27 million tons. We are producing around 40 million tons of sugar. So from like 5-6 years back, we were somewhere around 25-26 million tons. In last 5-6 years, it has reached to 38-39 million tons, closer to 40 million tons. In the meantime, ethanol came as the savior for sugar industry. Otherwise, it would have been very difficult, and the sugar industry would have been in a severe financial mess. Again, the ethanol demand depends upon the crude oil. Then we have the prevalence of knee-jerk reactions. That is the ban on futures or the export curves. In last 6 months, we have seen that there has been the export curves, like we have a future ban on and off, the same thing we have in like the export bans. It reduces our predictability of it reduces our reliability in the market, the domestic market as well as the global market. Ban on futures actually affects the future supply response. So if we are banning it today, we are denying the better remuneration prices for the producers. Next slide, please. So I would talk like how this has this whole industry and the value chain has been left defenseless in the absence of derivative contract. Mr. Ankit has given you a fair idea about how he has been affected as the whole spice industry. I will talk in a general. We all know that absence of a well-functioning futures market, then there will be price risk cannot be hedged, and the hedging has been explained by Mr. Chandrasekhar as well, and that hurts both sellers and the buyers. In the absence of agri-futures, if we see from the producer side, so farmers, they are forced to sell the produce immediately at whatever price they get. The problem with them is they cannot lock their sale price in advance and face uncertainty of income, especially in commodities for which there is no assured procurement. And I have explained you when I say assured procurement, at MSP level, majorly it is done for rice and wheat and by private parties like the millers for sugarcane, but again, it is fixed by the government. Then the other option that the farmer has is to export, but even that could potentially be restricted and banned in times of high inflation that we have seen in rice, wheat, and sugar recently. In other words, like farmers or producers will be forced to accept lower prices for their produce. On the side of buyers or processors who have experienced, and they have experienced over the time in last 9-10 months, very high raw material cost, and they are forced to choose from the following options. So they are left with no option but to raise the prices of their product or accept the lower margins. Majority of the FMCG companies, we have seen that they have raised the prices of their products to live and to survive. Like for example, Parle or UC Marico. The third thing that we see is the frequent bans also create a fear among market participants. And which kind of fear? Whenever they are trading, there is a fear in the mind that is going in the back of the mind that, okay, if I'm trading, maybe after 10 days, the commodity can just go ban. The government can ban it anytime. That is also leading to the drying up of liquidity. And that's why we have many futures contract, those are illiquid. For example, sugar. Sugar is a very like topmost commodity, but still it's not very liquid on the exchange. Traders who have to buy and sell the products, they are also left on the mercy of cash market and may end up paying more in the absence of price risk management. Next. Okay, how a well-functioning market can help to stabilize prices. So this will give you the idea of like how we as a whole, all the stakeholders can, including the government, can help to really stabilize the prices. First and foremost is the futures market. Price, how it helps? It gives the reference price to the spot market. So when I was working as a research analyst, I have seen that the markets, the next day the spot market opens, it first sees like where was the closing price yesterday. Then we see the closing price of the CBOT or the benchmark, the global benchmark exchanges. Even you see the Unjha, like the major, the cash spot markets or Indore for soybean. So they see where the futures market has closed on the previous day. In a country with fragmented agri markets, the agri futures platform provides a unified marketplace. And we know that this is like we have fragmented markets. As Mr. Ankit just said, like the prices were not transparent. Like the spice sellers of one city, they were not aware what is happening, what is the prices in that place. So in a country with fragmented agri markets, agri futures platform, it provides a unified. It provides a price that is seen to all, discovered by the maximum participation of buyers and sellers. Futures market, as it is already explained, like it plays a major role in price discovery. It can be a great tool to hedge price risk. So how to make the best use of futures? All the stakeholders should help deepen the futures market. We should not kill the market. We should help deepen it. And if there is a problem with the speculation, so there are various tools that the government or regulator can work out to control it, to tame it, not to kill it. So regulator and SEBI or even the exchanges they can try to bring more FPOs. We know that the participation of FPOs, farm producer organization, is less than 5%. And the government has incentivized in the last budget to create 10,000 more FPOs. So we can align the FPOs, and more FPOs need to be on board. Speed up the efforts of increasing trading volumes and participation on exchanges through awareness campaigns. Awareness campaigns here, IMC can play a very good role, because today itself I got to know that that you are one of the most like the accredited organization by SEBI for commodity trading. That needs to be, all those organizations or research houses, they need to create awareness campaigns. Use future market tools like margin, position limits, daily limits, circuits. There are various tools that the regulator can use, but not to kill it. Next slide. So this is my last, how the government can use the derivative market to stabilize the prices. Movements in future markets, we know it gives price signals in advance. Studying them, the government can get early warnings. So when I say early warnings, that means what? How it can help government. It can signal government about like when to liberalize imports and when to open up exports. Those signals the government can easily get from the futures market, because futures is what? Futures is basically the price that you are going to see in the future. It's the sentiments. it factors in all the happenings, minute to minute, or on an hourly basis or a monthly basis. All those factors, variations, the fundamentals are factored in the price movements. Government can get the signals from there. Resisting the temptation to ban futures trading, government should rather rely on futures trading tools for price stabilization. Promoting and incentivizing FPOs, as I already mentioned for SEBI as well. Investing and making friendly policies to increase the participation of private players. This is my last point, but here I have private players when I'm saying, we all know how, like financially, how we are, like the country as a whole, the economy is in deficit. The government is not in a position to increase more and more subsidies, and it will not be sustainable in the long run. So government has to transfer that risk to the private parties who have that capacity. Financially, they are strong. But for that, government needs to create that kind of environment that will incentivize the private players to come and invest in the long term, and can undertake the role of like the infrastructure, storage, warehousing, assaying units, or laboratory testing. And that's all. I would be welcoming the questions, and thank you so much.
Thank you, Prerna, for your wonderful presentation, very passionate. And of course, whatever you said made a lot of sense. You talked about the need to deepen and widen the market. Yes, but I must mention SEBI has taken several initiatives in the last 2 or 3 years to deepen and widen the market. Options contracts have been allowed, index trading has been permitted, mutual funds are allowed to trade, and PMS is allowed. Alternate investment fund category 3 is allowed. There is a series of actions SEBI has taken, but some of it actually gets nullified if the government of India starts to suspend the contracts on grounds that are not really based on facts. That's tragic. But abhi kya karen? This is a reality which we have to accept. But it is our job to keep communicating to the policymakers and to the world at large about the need for a very strong platform for price risk management, because farmers are also affected because they don't have forward guidance. The other value chain participants are affected because they don't have a forward guidance, and therefore I think that's extremely important. And you talked about transparency and unified markets that this platform gives. Yes, absolutely. Point very well taken. Thank you very much again.
I want to
I'm
say
now
that,
going to,
yeah,
sure,
when you said kya kare, so this is the best we can do, and what IMC and NCDs are, we are creating awareness related to, so maybe this will reach to the government as well.
I hope so. I hope so. And now I'm going to invite Arun to make his presentation. But Arun, when I see you on the screen, may I mention, you actually remind me of Abhishek Bachchan. Okay. All right. Go ahead, Arun. Thank you very much.
Yeah, thanks, sir. I think thanks IMC for this wonderful program. So I would just start by saying that what I have to speak largely that has been covered by all the 3 panelists before me, and Ankit ji has basically covered with his practical experience. So I think nothing can be better than that. But of course, I have a presentation to make, so I'll share my presentation. My presentation largely is a summary of what the other 3 panelists have talked about. So I think it would cover everything that in a way summarize what the other 3 panelists have talked about. So I'll just share my presentation.
Please. Yeah, perfect.
Yeah. Sorry, I think this is. I hope my presentation is visible.
Yes,
It
yes.
is. Yeah.
So largely, I think today's topic that we are discussing on is sustainable agriculture, rebuilding the value chain by managing the price risk. And if you look at sustainable agriculture, and I think in the beginning, Chandrasekhar ji, you have also talked about is that sustainable agriculture is not only about, environmental concerns and other things. It is also about how to, keep it going. And that requires a lot of things. That probably the environmental concern is one part of it. So I think how to start it is that, we need to understand from the Indian context why agriculture is such an important thing for India. And I think for doing so, we have to look at where do we stand, right? So if you look at the largest economies across the world, now we have overtaken UK and become the 5th largest economy. But still, if you look at these numbers, among the top 5 economies, India is the only economy which has a share of, in which the agriculture share is more than 15%. So agriculture still contribute a significant portion to our GDP. So I think that is one of the reason why agriculture still holds a very important place in the overall economic development of this country. Secondly, almost 60%, and we all know these facts, that almost 60% of our workforce is employed somewhere in the agriculture sector. So I think these are some of the important factors. Along with that, we are the major producer of a lot of commodities. We have the 2nd largest population in the world, which is soon going to be the largest population of the world. And we have to feed all those people. So agriculture is going to remain a very, very important, area for the government, for this country in times to come. Now, having said that, we also have to understand, if we have to build a sustainable agriculture, we have to understand what are the risks associated with the agri value chain, and especially when we are talking about the price risk management or the risk management. This has been covered in detail by you, Chandrasekhar sir, but I'll just mention briefly. So if you look at the value chain, I have tried to take only some part of the value chain, the important ones. So the farmer, the trader or stockist, and finally the processor or the user of the, I would say, the commodity. Now, all of them at different stages faces different risks. I'll start with the farmer. So the major risk, and I have just characterized the major risk because there are other risks which if I start mentioning them, probably the list will be very long, but I have tried to mention only the important one. The production risk, which can be the yield risk, that is how much the production will come, and the second is the quality risk. What would be the quality of my production? That is one of the important risks that is being faced by the producer of the commodity. The second is the price risk. At what price I'll be able to sell my commodity? Unless until I have I am able to sell my produce at the right price, the agriculture could not be sustainable. If I talk about the trader in the market or the stockist in the market, I think the risk that he faces, price risk of course remain there, because once he hold the goods, the entire risk of the commodity prices is with him. And I think the second risk is the counterparty risk, because once you probably the farmer also faces it, but to a lesser extent. But when it comes down to the trader level, I think the counterparty risk also goes up drastically. The third is the user of the commodity, the processor or the actual manufacturer. They also face the major risk. They also faces the counterparty risk and the price risk. So if you look at the entire value chain, the value chain that I have shown here, I think the one risk that is very common among all the three is the price risk. And I think this is one of the risks that need to be looked at or need to be catered to if we actually want to make our agriculture sustainable. Now, there are solutions to protect the farmer from the production risk. We have crop insurance now. It is being, it has increased its coverage has increased drastically in last couple of years. Right. We have, to some extent, the government has started announcing MSP of a lot of commodities, but I think it has a limited, it cannot reach to everyone because the government cannot procure the entire stuff. So I think to some extent, some farmers are protected by that, but of course, the risk largely remain with the farmer in all other commodities and in most of the areas where the MSP is not, as of now, made available. And with all the other market participants, the counterparty risk and price risk remain throughout, throughout their holding of the commodity or throughout their trading of the commodity. Now, I think why the risk arise, and there are multiple factors. If we look at the price risk side, and some of them we have seen very recently, whether it is COVID, we have all seen how it has devastated the entire supply chain, and how when the supply chain started rebuilding, how it has impacted the entire, the prices of various commodities, and because of which the entire, world has faced a different problem just after COVID started residing. Then, of course, the energy prices, and again, crude oil or energy prices is something which impact everything. The entire agriculture sector, the entire industrial sector, entire manufacturing sector, everything is impacted by how the energy prices are, doing. I think the third one is, of course, the geopolitical conflict. What we are seeing in Russia and Ukraine right now is a perfect example of how it has impacted the entire commodity market. You look at any commodity, whether it is the energy, whether it is agriculture commodity, whether it is fertilizers, everything has become very, very volatile in last 6 to 8 months. And of course, the currency. So I think these are the major factors. There are other factors also, but I think there are a lot of factors which impact the price, and because of which a lot of price risk, arise for the entire value chain. Now, can we manage the price risk? That is the first question. And if we can, how can we manage the price risk? And how efficiently each one of that method can help us in managing the price risk? I think that is a very important question. Now, there are different ways by which we can try to manage our prices. I think the first one is that we kind of pass our prices to our customer. I think it is possible in some cases where we run on a cost plus basis kind of a model, and we are in a virtual, kind of a monopoly situation. Probably we can do that. But I think in the commodity business, it is a very, very thin margin business, and we have a lot of competitors. So I think to that extent, it is difficult to follow in agriculture commodity business. The second one is that you procure the entire material and kind of manage your risk. What Ankit ji has also talked about, that if you before exchange came into picture, they used to procure most of their material in the arrival season. Then they used to store it for the entire period, and then accordingly they need to factor in all the costs, and then accordingly they have to price their commodity. Yes, of course, that is one way to do it, but that is a very costly way to do it. Probably the third one is to reduce your cost of operation and other functions. If you are facing prices, maybe your cost will increase here, but you probably reduce some cost somewhere else. That is the third way. Fourth is probably you turn to substitution. Now we have seen a lot of substitution happening into different commodities. We have seen a lot of poultry players switching between different feeds. So they switch from maize to pearl millet to barley, and maybe in some cases wheat and paddy also, if the prices of whatever commodity is competitive at that point of time. And edible oil is the perfect example. The consumers switch from one oil to other oil, and whichever oil is cheaper, especially the large consumers like your large retail chains and all these people. So I think this is one way of doing it. But of course, I mean, you cannot completely substitute. And at times what happens, the entire basket moves up. So we have seen in edible oils that all the edible oils, moves higher at the same time. So then you cannot turn to substitution. So is there any other way to kind of manage this risk? Yes, I think there is one way, which is hedging. So hedging is basically, Ankit ji has explained it into very detail. So I won't go into that much of detail, but it's basically mitigating your risk using the derivative exchange. And among all the options that we have talked here, I think hedging is considered as the most cost-effective way to manage your price risk. And I think whoever has used the futures or exchange platform to manage their prices, they would definitely tell that this is the most efficient way to do hedging. Now, I won't go into detail of this slide, but I think what agriculture derivatives do is that they provide a platform. I think it provides a platform for price discovery, because everybody is coming here and participating. So the price that is coming out of the futures market is probably the most accurate price. So it brings transparency for the entire value chain. Secondly, it reduces, or I would say it almost eliminate the counterparty risk, because the clearing corporation or the exchange takes the counterparty role. So basically they takes care of all the counterparty risk. The third is, which is the most important, is that it provides you the price risk management tool. Basically, you can manage your risk by kind of hedging on the commodity exchanges. So I think these are some of the major roles that the commodity exchange does, and I think that is why this is the most suitable way to manage your price risk. Now, largely talking about the ecosystem of commodity exchanges, so we have on one side the hedgers, hedgers like NKG, who basically hedge their price risk. They may be importer, exporter, farmer, anyone. And then we have the NCDX, and I think the key benefits that we have already talked about is the price discovery, infrastructure ecosystem, commodity financing, kind of payment felicitation, because everything is electronic, staggered delivery. So the delivery is in a staggered manner, so the buyer can take delivery. Increased competition. So increased competition bring efficiency, because there are a lot of buyers and a lot of sellers on the same platform. And then higher transparency. So I think these are some of the key factors because of which commodity exchanges are able to provide the most efficient way of managing the price risk. Now, why somebody should hedge? And again, this is also talked by other panelists. I'll briefly cover it. The first is hedging basically stretches the marketing period. So agriculture commodities, as pointed out by other panelists, is that limited, the arrival are in a certain period, around 2 to 3 months, and the consumption is throughout the year. So if I want to, kind of sell my stock for a longer period, it provides me a way to do that. So we have long-term contracts, and we can use those contracts to basically stretch our marketing period. Secondly, it protects your inventory. So even if you have procured material during the arrival season, you are subjected to a downside price risk. Now you can utilize the exchange platform or the commodity derivatives platform to protect your inventory from that risk. So that is very critical. I mean, that is one of the very important role, because we have seen many industries suffering hugely, especially on their holding of stocks. The value of their stocks deteriorates. They have to sell the material or the produce at a lower price, and they have no way to manage that risk. So I think that is the second advantage. Thirdly, it helps manufacturers to forward price his commodity. So a manufacturer of any commodity, whether it is a biscuit manufacturer or probably a edible oil processor, he has to kind of price his product for a long period. He cannot keep on changing price every now and then. So I think by using the futures platform, he would be able to protect his margins. He would be able to fix the lock in his price, and by doing so, he will be able to kind of provide a forward price for his commodities or for his final manufactured product. So I think these are the key benefits of hedging. And I think last one, why the futures market, how do it stand with, say, any other alternative which is available in the market? So basically, it has a pan-India reach. Anybody from across the country can trade. The second, which is very important, is the anonymity of the trade. So anybody who is participating on a futures platform or on a commodity derivative platform, the trade is completely anonymous. So usually we see whenever there is a large buyer who is coming into the physical market, the price start before the trade is executed. Even on the query, the price start going up. So I think the futures platform provide a complete anonymity in that case, and because which is a very, very critical factor for anybody who has to go into a big trade. The third is liquidity. So you get liquidity throughout the year. It is not that when the arrival will be there, you will get entry and exit. The contracts are available through the throughout the year. You can use the contract to either deliver goods, take delivery, or even without delivering, you can hedge the stocks, which is actually very difficult to do in the physical market. You can either deliver only, you cannot hedge. So you can either buy physical, you can sell physical, but it is difficult to trade without actually getting into the physical side of it. Counterparty risk, which is one of the most critical aspects, because we have seen that a lot of defaults take place in the forward markets, because those are unregulated markets, and we have seen that whenever there is a sharp price movement, there are a lot of defaults that happens in the physical market. But if you act through exchange, I think that is your basically your counterparty risk is, I would say, almost it almost vanishes. So then the price signals, it provides a online real-time price signal to all the participants, whether they are participating on the platform or they are not participating on the platform, which is also very critical, because a lot of people see exchange prices to refer to, to take their pricing decision. They are not directly participating, but they are referring to the prices to take their selling or buying decisions. So which is also a very critical aspect, because when there is a bilateral trade, this information is not available at what price the trade has happened. And then promptness of payment. So you trade, the moment you move out of the market, the settlement is on a T+2 basis. So I think these are some of the important aspect. So I think I'll end my presentation here, but I think in the end, I would just like to put that if we want to have a sustainable agriculture ecosystem, the risk management, especially the price risk management, it has to play a very, very critical role. Thank you.
Thank you, Arun. You made a compelling case for hedging and price risk management through derivatives trade. Absolutely interesting. Thank you very much. In fact, I want to make a statement which I've been making for at least 20 years. Hedging is not speculation. Not hedging is speculation. If you don't hedge your risk, you're speculating on the prices. And therefore, hedging is not speculation, but not hedging is speculation. This is something which I've been talking about. Another point that I want to make is, for last 20 years, from 2002, 2003 onwards, I have a favorite slide that compares the cash market with the futures market, and then how do we distinguish cash and futures market, and what are the benefits of the futures market. So मुझे अभी ये लगता है, even 20 years after the launch of the commodity futures, and I've been a part of the team that actually opened up this market 25 years ago, that we are still arguing and making out a case for continuing with this, and therefore I think this is a message that must go to the policymakers, that hedging is an integral part of any business. If they don't hedge, they will actually be speculating, and that without a tool for hedging, without price discovery, without a mechanism for price risk management, businesses are going to be facing a lot more uncertainty than they have been facing. As Arun, you pointed out, there are so many factors that have caused price volatility in the last say at least 1 year or even 2 years. For example, look at a La Nina phenomenon for last 3 years that the world has been facing, or a great spike in energy prices. And energy prices certainly impact the cost of production of agriculture commodities, and the supply disruptions which we have seen. No supplies coming from, for example, the Black Sea region, etc. All these are great amount of uncertainty over which businesses have no control. And when businesses have no control over these very great uncertainties of a great magnitude, they need some tool to manage the risks that arise out of these uncertainties. And even that, a simple time-tested scientific tool has been denied to those in the agriculture value chain. I think that's quite tragic. And it is not that the suspension of contract is hurting only the industry, the processing industry. It is actually hurting the farmers. It is actually hurting farmer producer companies. And I talk to and I interact with a large number of farmer producer companies who are looking for price signals, advanced price signals, and advanced price guidance, which unfortunately has not been available for the last 1 year. And most importantly, the last 1 year, we have seen extraordinary volatility in a very large number of commodities, including the agriculture commodity. And one irony of it all, you know what is the irony? The irony is provided by Chana contract. Chana contract is, Chana continues to sell below the minimum support price. And yet the Chana contracts have been suspended. The futures contract has been suspended. I don't know what is the purpose that is sought to be achieved. I'm being very blunt, and this is the only way in which I know to speak. And I think we need to that signal has to go very strongly to the policymakers that yes, wheat prices have gone up. I understand. Yes, wheat prices have gone up. They are sensitive. Chana prices are below MSP. We need to at least raise them closer to the minimum support price, or even slightly higher, because we have the sowing season. Chana is being planted now, and the price below MSP is sending out a very negative signal to growers. All that. So I think we need to make very compelling argument, but Arun, your arguments have been quite compelling, quite interesting. So I think we are probably coming closer to the end of the event, but I think we still have several minutes left. I'm not sure if any of the participants have posted any question in the chat box. I would request, feel free to post your questions in the chat box. But before we
questions over here.
They have
Okay.
posted some questions.
right. Before can somebody take up the questions? I'm not in a position to take up those questions. Will you mention the questions if you don't mind? If there is anything on price outlook, we shall not comment on anybody asking for prices or price outlook. But any other policy related question, yes, we'll take. Who's Arun? Are you able
Yeah,
to
I'll just read it for you,
please.
sir. I think, yeah.
Please,
The
please,
first question
please.
is from Mr. Dinesh.
one by
who
one,
has-
one by
yeah.
one, one by one? Yeah,
So he has asked if government had not brought the curb on wheat, especially,
Mm.
would that have caused negative impact on the market and inflation as the hoarding in other countries started due to Ukraine conflict? So
Okay, so may I?
yeah. Go ahead. Yeah, please.
This question was posted when I was presenting.
Right. Speak.
Okay, so I want to clarify to Dinesh or the other audience what happens basically whenever the export curve or any curbs like future bans, generally in terms of export curbs, or we have import restrictions, whenever it is done, so export curbs or future bans are done by the government, it sends a signal to the market that there is a serious shortage of that commodity.
Exactly.
And that signal, how it affects the mindset of the normal consumers or the participants. So what this will, like on the contrast, this will increase more speculative activities. So that will kill the purpose of the export ban. So that is actually
it actually perpetuates that negative sentiment in the market and further entrenches. And obviously, Prem, absolutely right. And therefore, these things have to be done with a lot of thoughtfully done. That's it. And I don't see a reason why policymakers cannot engage with the trade and industry and get their views. There is nothing wrong. And these reactions need not be knee-jerk at all. It should be through a process of consultation is what I believe. Let the policymakers take their decision, final decision. But please consult the trade and industry representatives and take their feedback, take their input, and then and do that. Well, I knew, in fact, pardon my mentioning this, when the government of India in February came up with wheat production estimate of 111 or 112 million tons, I wrote 4 days after that that estimate came, saying I don't see that crop at that level as estimated by the government. I see the crop closer to 100 million tons. And then in the next estimate, the government reduced it to 105 or 106 million tons. I now believe even 100 million is slightly overestimated. The crop is actually slightly less than 100 million tons. And finally, the market is a final arbiter. Whatever number you talk about, anybody, me or any exchange or even a policymaker, bureaucrat, whatever number he may give to the market knows well what the reality of the situation is. And therefore, I would actually, in a liberalized economy, instead of banning export, you continue to allow export, also allow import on the other hand. I don't see an issue at all. But anyway, whatever, we are in a political economy, and therefore policymakers are also kind of under pressure to take these decisions. What is the next question, Arun?
So the next question is from Mr. Brown Maxwell. He has asked, we should not depend on the market. It should be directly from farmer to the buyer. these people who are in between, who increase and decrease the price, kill the farmers. If the government really want to help the farmers, they should they should be more direct.
No, unfortunately, yes, it's a great thought. You can simply short circuit the distribution channel. From the farmer, it goes directly to the consumer. But remember, there are 130 million farmers in this country. There are 250 million families in this country. Who will buy from whom and how will it go? Number one. Number two, farmer produces paddy. The paddy has to be milled. Who will do the milling? Okay, those are questions. For example, fruits and vegetables, yes, possible. Farmers can set up their own shops or their own markets and sell directly to consumers. I don't see that. But there are, for example, oilseed grower. What will an oilseed grower do? He has to sell to an oilseed crusher who will convert that seed into oil, and that oil will in turn be sold to consumers. And therefore, it's not as simple as that. Distributive trade is extremely important, primarily because we are a very large country. And as I pointed out, there are regional variations. If somebody in South India wants wheat, South India does not grow wheat. It has to come from Rajasthan, UP, MP, Punjab, Haryana, right? And therefore, if somebody wants coffee in Northern India, it has to come from South India. And therefore, you need distributive trade. And the distributive trade does an extraordinary job because they are spread across the country. Therefore, it's a great feeling to say we must connect farmers and consumers, but in practice, it's not going to work. Next question, please. Yeah.
The next one is from Ms. Ashtika PT.
That's okay. Only the question.
Yeah,
Only the question.
yeah. Can contract farming in agriculture be a game changer in agribusiness ecosystem?
Anyone? I have an answer, but anyone else wants to speak? Ankit?
I have actually, when it comes to spices, I have actually come across a few companies. Since these European nations and the American nations have stringent norms of late with regard to pesticide residue and IPM material, organic material with NOPP NOPP standards. So there are a few big exporters that I'm aware of who have taken up contract farming. The biggest issue with contract farming is the sustainability of the project.
Right.
Initially, all these companies and all the people are very enthusiastic about having their own farms, giving the contracts, and the farmers are enthusiastic. But over the long run, it becomes very, very difficult to sustain these contract farming projects because of the highly competitive environment that exists in all the agri commodities. So contract farming, yes, it can be a game changer, but we'll have to look for solutions that can be sustained over a longer period of time. Until then, I think the traditional methods that we've been following are going to be existing.
Thanks, Ankit. I want to mention, I was a part of India's first private sector initiative of contract farming in cotton, okay, way back in 2002, 20 years ago. And in a place closer to Ankit's place called Pollachi, okay. All right, so I was a part of the team which promoted cotton. And as you rightly pointed out, when an individual or a firm does contract farming, it has limitations of capital and manpower, okay. And then the contract farming as a system worked extremely well for 3 or 4, 5 years, but we could not scale it up. We could not scale it up because of limitations of capital, manpower, etc. But the proof of concept was available. Now, FPOs, farmer producer companies, didn't exist those days. They exist now. And therefore, I'm keen, I keep talking about the need for connecting large processing houses with farmer producer companies. And because in a farmer producer company, there are several hundred farmers, 500, 600, 800, even 1,000 farmers who produce a particular crop, that a contract between a processor and an FPO allows the processor captive raw material, so he can buy. And the farmer producer company can produce exactly the quality or the variety of crop that the processor needs. For contract farming, yes, is important, but I have also found a huge amount of reluctance on the part of industries, processing industries, to start engaging with FPOs. Often I sarcastically say that many of the MDs and CEOs of processing companies think that contract farming means he has to go down to the field and start riding a tractor. Not really. It's a system. He needs to engage with farmers and tell them exactly what is required. For it can potentially become a game changer. I'm sure the farmers and FPOs are ready, but the onus now is on the processing industry to connect with FPOs and enter into agreement. Anyway, next question. Yeah.
So there are two more questions. I'll read
Yeah.
both of them together. I think
Yeah.
one is regarding this Kisan Samman Nidhi scheme. So it's basically, should it be revived? And there is one regarding, should all sugar mills in our country be privatized? I think these are the
No, I think we will skip, I think, because that's not, my views about the sugar industry are very clear. We have sugar units in the cooperative sector, in the private sector, and in the public sector. The government's view generally these days has been the government has no business to be in business. If this is the public sector sugar mills must be privatized. Yes, I think that makes that will make sense. But cooperatives must continue to remain. The private sector and cooperatives can work together, and there could even be a healthy competition. But I think Prerna raised that, do we need to produce 30 million of sugar? Do to cultivate sugarcane on 5.5 million, 5.5 million hectares of land, because it's a water guzzler, and that is exactly where sustainable agriculture comes in. But that's a very different conversation altogether. Yeah.
Do we have
Sure.
time?
Bolo.
Do we have time? So can I
Go ahead.
add to, apart from whatever you rightly mentioned about the problems that we have in sugar industry, it is not about it's not about the privatization of sugar mills. It's about the intervention of government, and in which way, whether it is making the sugar industry or whether the sugar industry is bleeding. What happens in sugar industry is basically the government is fixing the FRP. The FRP, there has been an enormous increase, like huge increase in the FRP every year, almost every year. Okay. Now SAP, the states, few states, they have their own sugarcane prices. And they are at present, like it goes around 380 rupees per quintal, or somewhere more than 300 rupees. Now we are increasing the cane price. So farmers are producing more. They are getting the signal, and they know that there is a assured market. There is assured procurement by the sugar mills, because sugar mills are forced to purchase that. So there is like the sugar production, more and more of sugar production. And now what the government is first fixing the FRP, increasing it. The farmers are responding with large amount of sugarcane. Mills have to produce, they have to convert it into sugar. More and more sugars are produced. Then again, now there is a sugar glut. Now again, government has to subsidize it to export it. So it's like you're just rectifying your one mistake with the other mistake.
Correct. I've commented on this numerous times and criticized. I agree, completely agree. Right. So therefore, the solution for this is a complete and thorough review of the sugar sector policies. That's the only way to go ahead. Arun, anything else?
No, sir. I think there are no further questions.
All right. I think we have kind of run out of time. Any closing remarks? Let me start with Ankit. Any final word, closing remark that you may have?
Oh, it was very insightful being here today. Thank you for having me, NCDX as well as IMC. Lot to learn. And one thing that I would like to close with is these contracts, whatever we have in spices, they've been, as long as government intervention is not there, since spices are not essential commodities. They've been running smoothly, but wherever essential commodities come into place, I think government intervention happens. So that kind of interrupts the flow. I believe for any agriculture commodity, a sustainable contract is important, and I think NCDEX is doing a wonderful job along with IMC, and I hope to keep this going in future.
All right. Thank you. Thank you. Anything, Prerna, any closing comments that you may have?
We have covered most of the point. The only like the other that is still remaining is like if government is really keen towards helping, it's not only the government really helping the agriculture ecosystem.
Correct.
Let it flourish. And there are other tools like don't go for outright ban, go for the restrictions, go for go for increasing the margins. Then there are limits. In case of export curbs, you can have the duties. Use those duties. If you want to support the farm producers, consumers, give them subsidies, but they should be crop neutral. Don't focus it to only wheat, rice, or sugarcane. The country now needs to be diversified.
Absolutely.
Transforming economy.
Very good. Point taken. Point well made. Arun, any closing comments from your?
Yeah, I think so. There's one thing probably what other companies have said is that basically, the futures market or derivative market is more like an insurance. So I think it has to be taken with that kind of a spirit.
Yes.
I think it is required. It is necessary, right? And we can see how what was the penetration of insurance maybe around a decade back and what it is today. As the awareness grows, I think more and more people start taking insurance. I think some similar things should happen in the commodities market. Somehow, the panelists have talked about suspension and all, so I won't speak much about it. But I think the continuity of market is the utmost thing that every participant looks forward to. That is the bare minimum. In a way, I would say that everyone who want to participate into any market, he looks forward to the continuity of the market. So I think that is a critical factor.
Right. Very true. Very true. Very true. I must also actually add that when you look at, say, wheat flour mills, cotton ginning pressing factories, spinning mills, textile mills, look at dal mills, look at solvent extraction plant, look at oil seed crushing plants, look at refineries, look at sugar mill. I mean, I have all those numbers. I can reel off all those numbers. How many of them are trading on NCDEX? And this is a question I've often posed. And therefore, NCDEX's strategy to rope in those hedgers who have actual exposure to the underlying commodity, I believe that needs to be strengthened so that you will have more and more of hedgers participating on your platform. And once you have more and more of hedgers coming onto your platform, the other side, obviously the risk takers will certainly come. But today, your NCDEX's promotional effort to woo and to attract genuine hedgers, which are several thousands across the country. I think that itself, that attempt, that effort, that promotional work needs to be strengthened very, very strategically, and maybe we can engage in that conversation at another point of time. So I want to conclude this today's event. Thank you very much. I want to thank Arun Yadav. I want to thank Prerna, and of course Ankit for sharing the thoughts. All the participants have been, I guess, quite patient, and I hope these deliberations have participants have found some value in these deliberations. I want to thank IMC team for administratively managing this, including Anita Naik and the IT team of IMC. Let us now, we will conclude this event. Let me say good luck. God bless you all. Stay safe. We'll be doing a number of events in future, and I'm sure all the participants will continue to receive email circulars from IMC about our future events. And therefore, stay connected. Good luck. God bless you all. Thank you.
Thank you so much.
Thank you.
Thank you, everyone.
Thank you so much.